am joined in the studio by the lovely Felix Milton. Good morning.
Good morning.
How are you today?
Very well, thank you. How are you?
Yeah, good. I'm better now I'm in here. It's a bit damp out there.
A little bit wet, yeah.
It's not great. So we're going to be talking everything money today and everything financial. And so if anybody's got any questions, they can give us a call, 01271 323 010. But I guess, at the moment, what could be affecting people's money?
So at the moment, a lot of people are going to be worried, I presume, because of the Brexit situation and Parliament being prorogued, which has never really happened before. So with Parliament being suspended for 5 weeks, markets are unsure as to what the direction could be. But supposedly now we're not leaving on the 31st of October. So again, there's still uncertainty in the situation with regard to what we are doing, and then that of course has a knock-on effect on the stock markets and people's investments.
Yeah. I know it does seem really strange to me, because obviously Parliament are having 5 weeks off. So how does them having some time off affect how the stocks and how the stocks and shares all work?
Well, it means there's going to be no decision in theory. There may be some, but unlikely to be as proactive decision making from Parliament. So companies can't plan; they don't know still what's going on. So they're a bit in limbo until there is some sort of certainty with regard to the outcome. So that's why Parliament being off creates volatility in the markets, because people don't really know what's going on.
Okay, could it go in in a good way for some people though? Could some people just rocket could their shares go up because of this uncertainty, or is the fact that we still don't know quite what the UK is doing with Brexit and things like that, is that just going to leave everybody in limbo for a bit longer?
Well, it could in theory mean some company shares should rise, because if the pound is weak, those companies that sell overseas actually have higher pound earnings. So that means that they basically benefit from bigger profits in pound terms. So that's one benefit. And of course, of the FTSE 100 companies, 70% of the earnings on that are derived from overseas. So with a weak pound, their earnings look higher in pound terms. So that's a good sign for them, and that thus their share price may go up. But of course, there's volatility, and if they're headquartered in the UK, what's going on will affect them more. So they may probably stay largely static. But again, if there is a decision, hopefully that will provide some stability in the market.
Yeah. If anybody's worried, who can they contact? So if they are currently in the market and they're concerned about how it's going to go, which way it's going to go, should they pull their money? Should they pull that stock? Should they keep it there? What would your advice be?
So if you are concerned, see a financial advisor who'll be able to guide you through it. But the first thing I would say is ignore a lot of the media, because they are not typically good at making people feel calm. And if we look back in 10, 20 years, what will Brexit be? And if you think back to history in itself, and you had, say, some Eastern European countries leaving communism, which at the time would have been all the talk and all the rage, but that moved on, and so their market stabilised and so on. So that's something to bear in mind. Yes, now it is concerning, but if you're in it for the long term, hold out, because that's probably going to be the best thing for you.
Yeah, it's just all going to come, and it does all come around in the end, really, doesn't it? I think it just all, you've got to go through the rough to get the smooth sometimes, I think, in stocks
exactly.
and
And if you look historically with stocks and shares, the market has gone up consistently throughout history, and it does go down, and there are periods where it crashes. But if you ignore that and can hold on and sit tight throughout those periods, you should do better in the long run.
Excellent. So at the moment then, if I don't want to do stocks and shares, what should I be doing with my money? Should I be investing it? Should I be putting it into a certain bank account? Or what's the best way to invest at the moment?
I mean, it all depends on what your goals are at the moment. If you're investing for retirement or for the longer term, you want to invest in stocks and shares really, because it means your money should keep pace with inflation and grow greater, so the buying power of that money is there for you and keeps up, whereas if you leave it in cash, the buying power will go down year on year. So if you invest it, it should make sure that it keeps pace with inflation, and when you get to retirement, you've got a nice meaningful sum to meet your costs at that time. So that's what you should do for the longer term. Even if those that are thinking of buying a house in say 5 to 10 years, that could be even reason to invest. But if you've got a sort of a short-term need, staying in cash and making sure you're looking at the highest interest rate account is probably the best thing for you. And again, it depends on what you need. And if you don't need that cash for say a year, a fixed rate bond is probably going to offer you a better rate than a variable easy access account. So locking that money away can sometimes give you a slightly higher rate. But if you have more immediate needs within say the year, just the highest interest paying easy access account is probably going to be less for you.
Right, okay. So there are lots of ways. Now, I was unsure, because sometimes people say you've got to stick to, you've got to be in a contract for so long. is that the case with a lot of people? Like you said, you can do like a short-term one, can you? Is that the best way to go down if you need more immediate savings?
Well, a lot of the fixed rate accounts you can access early, but you suffer a penalty, which is a loss of interest.
Right, okay.
So typically it doesn't make sense to do that, but it depends on what you're going to do with the money and if you really need it.
Yeah.
I mean, if you can't avoid it, then fine, access it, because you can actually access it. But some of them are fixed and you can't access them at all. But yes, you can do shorter periods, but really a year is the sort of shortest fixed rate period you can get.
Right, okay. Well, we're going to play a song now, and then are you okay to wait and then ask some more questions?
Of course.
Fabulous. We'll come back after this. We're listening to The Voice, local radio for North Devon. It's Lisa Mackenzie here with you until 2 today, and with me I've got Felix. Hello.
Hello.
So Felix Milton, you work locally, so you help people with their money worries and any financial needs that they may have.
Yes.
So while that song was playing, I was asking about property. Now, this is very much a do we, don't we time, isn't it, for property buying?
I mean, at the moment, in some areas in particular, the property market is very expensive. And British people have an obsession, if you like, with buying property and owning something because they can see it, because it's tangible. But we are sort of anomalies in the Western world. Some other countries see renting as more of a, you do that for life rather than buying property. But property is great, but primarily look at it as your main home firstly. So if you want to buy it to get on the housing market and you're going to live there, that's fine, because it doesn't really matter if it's going to go up or down, because you're buying it as a house firstly.
Yeah.
And any profit or loss doesn't really matter because you bought it as a home. It's important to remember that. But those that are looking to invest in property for the longer term, there are some questions they need to ask themselves as to whether they want to do it.
Okay.
So the first question or thing to ask yourself with property is that it's not easy to sell. So if you suddenly want to sell tomorrow, you have to put it on the market and you've got to get buyers, got to get it interested, and that can take a period of a few months.
Yeah.
Whereas if you're in, say, stocks and shares, you can sell it instantly if you want to and get the money pretty quickly.
Okay.
But where property is now, we've had quantitative easing, which has gone into boosting asset prices. So things like property is perhaps more expensive than it otherwise should be.
Yeah.
Interest rates are very low, so mortgage borrowing is very cheap. So that's one of the attractions of buying property. However, interest rates are unlikely to be this low forever. So if they do return and start to creep up, will you be able to afford those mortgage payments? So banks typically will have to factor in some sort of threshold and stress test as to how much you could pay, but it's only a few percentage more than it is now when they do that. So it can rise more than that. So you've got to bear in mind that if, say, you couldn't afford it, but you're not likely to be the only one, so others may not afford it, and if they all try and sell at the same time, you may have to cut your price and they cut their price to try and get a buyer. So property can be a great investment and a lot of people like it because they can use a mortgage, which is called gearing. Okay. So that means borrowing to invest. So that's one thing you can't do with the stock market, but you can do with property.
Okay.
But of course, you're increasing your risk exposure there because you're using money that's not yours to make yourself money, but you have to pay back that money at the end of the day.
Yeah, definitely. It's a hard one, isn't it? Because I remember when I bought my first house, or my husband and I bought our first property, we were back in the days of 100% mortgage, which is a bit bonkers, really, that somebody would give you the full price of a house. But obviously we paid it back and we've grown and all the rest of it. But there isn't that anymore, is there? There isn't that kind of, some people are struggling because they haven't got the money, so they're in rented, and because they're in rented, they can't then save for the deposit for a mortgage. Do you think there would be any way ever that they will actually look at, well, actually they can afford to rent, they can afford a mortgage?
It's something that the government is looking into, I believe, at this time, and the regulator, because as long as you can show a consistent payment pattern of rent, it means that you, in theory, can afford a mortgage payment. Yeah. So hopefully the rules will change, and those that say can prove they've paid rent consistently for 2-3 years mean that they can get a mortgage. But those that maybe rental arrears or missed payments, yes, they probably shouldn't borrow to buy a house. Yeah. But yes, there should be some rules changing, hopefully, which would allow those that rent to buy a property, maybe on a 100% basis, but again, maybe allowing them to save somehow through another scheme.
Yeah, no, I think that's a great idea. There's so much, isn't there, in the financial world to talk about. We just haven't got time today.
No.
Which is such a shame. But if anybody is worried, they can contact you, Felix, can't they?
Yes, they can, yes. So I'm on Facebook and Twitter, and you can, of course, my formal company role as a financial advisor at Philip J. Milton and Company, so you can call up the office and arrange an appointment with myself if you'd like to come in and discuss your finances and make sure they're working as hard as possible for you.
Yeah, I think that's the best. I think the best thing now is to make sure that you are putting your money in the best place so you get the most out of it, really, isn't it?
Exactly, and
Yeah.
everyone's going to have different needs and different things they want to do with their money, and so making sure that they've got their funds structured in a way that will allow them to meet their goals is something that we particularly work on as financial advisors. So sometimes if you think something is unachievable, it may be if you restructure things in a certain way. So it's worth always checking and having an appointment, and most will offer an initial appointment at no cost, so go and have a chat and see where it takes you.
Oh, that's brilliant. So I have put your photo on our Facebook page today as well. So if anybody has got any questions, feel free to go. It's going to be open. Felix will be looking at them. Feel free to pop a message on there or contact him direct, or like I said, go into Philip J. Milton in Barnstable and get some advice.
There we go.
Thank you very much. I look forward to seeing you in a couple of weeks' time.
Excellent.
And hopefully we'll have a bit more of an idea of what's going on in the markets.
Well, hopefully, yes.
Fingers crossed. Take care, love.
Thank you.